Welcome to the Skilled MBA Finance Case Study Series. Today's focus, Craft Brew Alliance and Anheuser-Busch InBev, a compelling case of strategic collaboration in the beverage industry. Craft Brew Alliance, known for its portfolio of unique craft beers, holds a pivotal relationship with global giant Anheuser-Busch InBev. Through partial ownership and exclusive distribution agreements, AB InBev provides CBA with unmatched access to market reach, logistical support, and growth capital. This partnership not only enhances operational efficiency, but also shapes CBA's long-term strategic decisions. From scaling production to navigating competitive pressures, the alliance impacts everything, including potential mergers or acquisitions. The case underscores key strategic insights: how partial ownership influences governance and autonomy, the trade-offs between independence and resource access, competitive positioning within the evolving U.S. craft beer market. The strategic relationship between Craft Brew Alliance and Anheuser-Busch InBev is pivotal. Anheuser-Busch InBev's global reach complements Craft Brew Alliance's innovative craft offerings, creating a synergy that enhances market presence. This partnership leverages Anheuser-Busch InBev's distribution network, while Craft Brew Alliance benefits from increased brand visibility and resources, crucial in the competitive United States craft beer industry. AB InBev faces a critical decision under the pay or play clause. They must either acquire CBA at RA 1,168 per share or opt to pay a RA 1,525 million termination fee. Chief Executive Officer Andy Thomas is keenly awaiting this decision, which will significantly impact CBA's position in the competitive craft beer market. AB InBev initially acquired a 31.6% stake in CBA, gaining distribution rights and market access. The partnership evolved with collaborative brewing and shared resources. CBA benefited from AB InBev's national distribution network, expanding its reach. The pay-or-play clause now requires AB InBev to either acquire CBA or pay a termination fee. The United States craft beer market is maturing, with growth slowing from 18% to 5%. Over 7,000 craft breweries intensify competition, leading to market saturation in urban areas. Consumers increasingly prefer local microbreweries, impacting larger craft brands. This shift necessitates strategic adaptation for sustained success. CBA's brand portfolio includes Kona Brewing Co., a Hawaiian-themed flagship with national recognition and growth potential. Red Hook Brewery, a Pacific Northwest pioneer, maintains a loyal customer base despite flat growth. Widmer Brothers, a Portland-based legacy brand, boasts strong regional identity. Emerging brands like Omission Beer and Appalachian Mountain Brewery add diversity with gluten-free and regional offerings. AB InBev faces a portfolio gap, needing premium craft offerings to counter declining mainstream beer sales. The Kona brand presents a strong growth opportunity for international expansion and premium positioning. Full ownership of Craft Brew Alliance would optimize supply chain efficiencies and enhance market penetration while preventing competitors from acquiring Craft Brew Alliance's portfolio and market share. CBA faces pressure from activist investors for immediate value realization and struggles to maintain growth independently amid intense competition from local microbreweries. Capital constraints hinder expansion. CEO Andy Thomas must consider an Anheuser-Busch InBev acquisition at Rs 1,868 share, independence with a Rs 1,525 million termination payment, or explore alternative acquirers or partnerships. Valuation approaches include discounted cash flow, projecting future cash flows with different growth assumptions for Kona and legacy brands. Comparable companies analysis uses enterprise value, earnings before interest, taxes, depreciation, and amortization multiples from similar craft brewers, ranging from 9-12 times. Precedent transactions involve examining recent craft brewery acquisitions like Ballast Point and Lagunitas. Sum of the parts provide separate valuations for high-growth Kona and mature legacy brands. DCF valuation involves estimating future cash flows for Kona and legacy brands, considering growth assumptions. This method provides a detailed financial forecast, crucial for understanding potential returns. By comparing these projections with market data, we can assess the intrinsic value of the brands, setting a foundation for strategic decisions in the craft brewing industry. Recent craft brewery acquisitions highlight strategic value, with Ballast Point acquired by Constellation at 20.0 times enterprise value to earnings before interest, taxes, depreciation, and amortization, and Lagunitas by Heineken at 15.8 times. Craft Brew Alliance's offer by Anheuser-Busch InBev at 11.5 times suggests potential undervaluation, emphasizing strategic synergies beyond financial metrics. Kona's Hawaiian heritage offers unique brand equity, adding intangible value beyond financial metrics. Anheuser-Busch InBev's global distribution could propel Kona's international growth, surpassing projections. Craft Brew Alliance's research and development and brewing expertise enhance Anheuser-Busch InBev's craft credibility. Craft Brew Alliance brands strategically fill premium segment gaps, where Anheuser-Busch InBev lacks authentic offerings, driving strategic value beyond numbers. AB InBev faces a strategic choice: acquire at Rs 1,868 share to secure brands and block competitors, or pay Rs 1,525 million to exit, avoiding overpayment but losing strategic gains. CBA, if acquired, offers shareholders an immediate premium. If not, it gains a cash infusion and potential partnerships. Both navigate asymmetric information challenges. Valuation in mergers and acquisitions is subjective. Strategic buyers often pay premiums for synergies and competitive positioning. Contract structures, like pay or play clauses, have significant financial implications. Stakeholder pressure, from activist investors and market expectations, influences negotiation timing. In consumer markets, brand value, including equity and authenticity, transcends financial metrics, adding complexity to valuation. Thank you for exploring real-world case studies in corporate finance and strategic mergers and acquisitions with Skilled MBA. For further inquiries or support, reach out via mobile at +91 87553 00795 or email at support@skilledmba.com. Visit our website at https://skilledmba.com for more resources.